Hi, how are you? Welcome to Achieve with Chiagnos. Achieve with Chiagnos is your number one solution provider to matters relating to business and life in general. We help you to succeed. And because succeeding is part and parcel of us, join me today as we see if you are in a business, how do you measure performance? What are some of the things you can consider while measuring performance? Because we want to know at the end of the day, are we making profit or losses? Aya, ni rahisi sana. You normally make sales. For the sales you make, just keep a record of the sales you have made. A product ABC here. Product which eka hapo, service which just record them and know these are the amounts that have come in form of revenues. Then keep a list of your expenses, so you know salaries have paid this, have incurred this in terms of utility bills, have incurred this for internet, telephone and storage and everything. The list systematically. After that, just subtract these sales that you have made with the expense. You will get what we call profit or loss, and that is how we generate something called statement of profit and loss. Another thing, your best product that you sold during the month. So how will this help you? If you find this is your strength, this is what we sell more, then you market it even more to increase the sales volume. Another thing on how you can see performance of your business, you can see areas where you had weaknesses, and through that weakness you can improve. Maybe you can realize you have weak internal controls, you are losing money in terms of theft, or this product is the worst that is not moving in. So if you realize that this stock does not move very fast, you can come up with strategies like offering discounts for that product, or intense marketing, even leverage on social media to do such things, and this will assist you to assess the performance. Another thing is cash flow. Now, I want to explain the difference between a cash flow and an income statement. The statement of profit and loss. Profit and loss will tell you just how much you have made in terms of profit or loss, because you take sales less the expenses. Now, cash flow, you have to monitor cash flow very easy, and these two books should not miss in any business, because for cash flow you want to see the movement of that cash, how they are coming in and how they are going out. So how do we measure this cash flow? You can take your profit after preparing profit and loss, then you can adjust for non-cash expense. Non-cash expense here, I'm referring to, these are items that you recognized in the income statement, like you have incurred that amount, but in real sense you didn't incur anything. For instance, depreciation, amortization, like such things. In real sense, you did not pay for amount to incur that depreciation. So it's a non-cash expense. So that non-cash expense, you adjust it under the adjust for section. Then you go to changes in working capital. Changes in working capital, these are things like current assets and current liability. They assist you to run your business on a daily basis, like stock, cash at hand, cash at bank, like such small things. So with this cash flow, it will assist you to monitor how much money you have on real time, such that having monitoring, having a monitoring system to see the money that you have real time, because income statement just shows profit and loss, but you want to know the account balances and how those money were used. So through continuous monitoring of cash flow, then you can see how your business is performing, because you know you have how much in the bank and what is the trend. Like by the end of 2 days, we normally project a revenue of 60. Today in the cash flow statements I'm seeing 40, so that tells you that there's something wrong. Another thing or another benefit of cash flow, it will help you to distinguish things. Suppose you are selling, you have another project, and then this project you are sending money there, or money is coming out in different places and different things. It is the cash flow to look for, not the income statement. Because income statement, especially if you are preparing it with a concept called accrual, you are not in a position to know the actual balance in the bank. But through cash flow, you are in a position to see these are the movements of in and out of cash. Another thing that will help you to assess your performance or in your business is maybe customers review. Do they like your product? And if they don't, what are some of the measures you can take to mitigate such things? That is a short one, and thank you for listening to me. This is Achieve with Chiad Notes. Until next time, bye. Please subscribe, and this video has been brought to you by Sam Justin. Sam Justin is your #1 solution to online videography and photography. Thank you. Bye bye. Bravo.